Hello listeners, and welcome to Plugged In, the energy news podcast from Montel, where we bring you the latest news, issues and changes happening in the energy sector. This week, we've seen Trump's tariffs on Europe and Asia cause turmoil throughout the markets. For the European energy sector, concerns have been rife about what his new policies will mean for the global energy transition and investments into green and clean power. However, it might not be completely doom and gloom, as we will hear from our guest today. In this episode, I'll be speaking to the Norges Bank Investment Management, also known as Norway's oil fund, about how the news this week has affected renewable energy investments globally. As I spoke to the oil fund, equity markets were slumping as Trump's announced tariffs were set to take effect. But since then, markets have rallied substantially as the White House paused additional tariffs on countries willing to negotiate with the US. This new topsy-turvy world highlights the unpredictability of US policy and the impacts on global markets, not just energy markets. But first, I'm joined by Olav Vilnes, our Norway editor here at Montel. Hi Olav, a warm welcome back onto the pod.
Thank you very much.
I think let's start off by talking about the initial reaction from the energy markets to the US tariffs since they came into force.
Yeah, you could see a huge moment in the week from the 2nd to 9th of April. You could see the gas price, for example, falling close to 20%. Oil prices are down 20%. Carbon down 12%. And even the power markets fell up to 10% if you look at the German market. So it clearly had a huge impact. And after you had this 90-day break announced late on Wednesday, you've seen a slight recovery, but not nearly as much as they fell previously.
It's obviously had an impact. I mean, but what is the sentiment more generally across Europe towards Trump and the new White House administration? What would you say?
I think it's very nervous. I mean, you have had a Europe that came out of the energy crisis in 2022, just got rid of the dependence on Russian pipe gas supplies. And then, of course, you have now a fear that you have just replaced one dependency with another, and also with an erratic president who just makes up policies every week, and you don't really know about the stability of these energy imports.
Almost from day to day, as I said in my intro, almost could be hour from hour sometimes. But that's very interesting, Olav. I think we're going to be hearing from Norway's oil fund shortly about the tariffs and their perspective. I mean, they're in it more for the long term. But could you give our listeners a bit of an overview of what the fund does here in Norway, what it invests in, what it focuses on, and what it concentrates on?
Yeah, it was set up in 1996 to shield Norway's economy from the ups and downs in the oil price, and also to save revenues for future generations, not use up all the earnings at once. And investments are spread across markets, currencies, different countries around the world to sort of diversify risks. And the value has increased quite a lot. I think there's now $1,700 billion value of the fund. So it has a huge exposure in global markets. It's also in recent years expanded into investments in renewable energy. So they own several wind farms.
We'll hear more about that later, but thanks very much for setting the scene for us there, Olav. I'm pleased to be joined by Harald von Heyden, Global Head of Energy and Infrastructure at Norges Bank Investment Management, also known as Norway's oil fund. A warm welcome to the podcast, Harald.
Thank you. Thank you for having me, Richard.
So, I mean, how would you evaluate the investment climate into renewables at the moment? It's certainly turbulent times out there.
Yes, I think I almost want to use a cliche that you have to be able to have two thoughts in your head at the same time, right? So clearly the equity markets are going through a bit of a turmoil, and nobody is unaffected by that. Strangely, I think, I mean, in the private infrastructure sphere, things are looking better than for a long time. We are quite optimistic about, demand forecasts. We're seeing some of the cost inflation tapering off. We're seeing a lot of projects being built, especially in the battery space, but of course still in the traditional solar and wind space are also picking up. We see PPAs coming up both in length and in prices. Talking to industry participants just yesterday at the gathering, it seemed to be a consensus that PPAs now typically can come up into 20 years and with higher levels towards the end even than we've seen for a long time. So all in all, I think private infrastructure, if as long as it can remain unaffected by the turmoil that we're seeing both in equity markets and the tariffs and so on, it's actually looking pretty good.
Excellent. I mean, we'll come back to the tariffs there, Harald. But if we're looking at where, this optimism, that's quite a refreshing, that's quite a positive, aspect of what's happening here. It's maybe a little bit unusual given the news flow out there at the moment. But where in particular is that optimism? Is it more in Europe? Is it elsewhere? Or where are you noticing that?
No, I mean, the strongest optimism is actually in the US, where the demand kind of forecasts are being adjusted upwards every second or third month, the long-term demand forecasts. And we've been told that people are going for gas turbines, just not because they necessarily, want to go back into fossil fuels, but because it's one of those things where you can get volume very quickly. Although it seems that some of the gas turbine suppliers are sold out way into the 30s. So it's a bit of whatever they can get hold of, whether it's, wind or solar, batteries, gas, nuclear. A lot of the initial optimism around that has maybe been tempered a bit by some of the newcomers into the industry who understood that this is 15, 20, 25 years ahead. So I think, again, of course, in the US, we'd have to discern between if you talk about wind, between offshore and onshore wind. I think Trump has a particular hatred for offshore wind, while I think onshore, of course, is just part of the power industry that everyone needs as much as possible of.
So when you're talking demand, you mean power demand, I guess, here, not,
Yeah, power demand,
Yeah. So how would you place Europe here in terms of the investment climate for renewables?
Yeah, it's. There's more uncertainty around demand growth. Clearly, the whole GDP, the whole industrial sector is not looking as rosy in many places in Europe, and also the AI, the data centers, they're coming, but they're not seeming to be coming as fast as they are in the US. And also the alternative to kind of power the data centers or any new demand with gas, as you have it in the US, is more expensive in Europe, obviously, since we import most of our gas. So still, but big renewable projects are still being FID'd or constructed. We still have a growth in the industry in Europe, but not at a level that perhaps we're seeing in the US or in Asia, of course.
And that's the same for PPAs as well. I mean, you think the outlook for PPAs in Europe is a little bit behind that in the US?
A little bit behind, yeah. But we've seen good PPAs, maybe not 20 years, more in 10, 15 years. But again, it's a good demand for PPAs. Yeah.
I'd like to turn to data centers and AI, I think, because there's an interesting discussion there around having the most of the servers in the US and how that pans out, because we've seen this week very clearly, Wednesday at midnight, the tariffs from President Trump kicked in, sparking global market turmoil. It's been extremely volatile all week, but mostly the arrows are pointing down, Harald. What has been the impact on Norway's oil fund and the way you look at investments, and maybe investments more generally into renewables?
Yeah. No, I mean, the impact hasn't. Of course, everyone can log on to our website and see what has happened to the to the numbers that are ticking there, and that hasn't been all that positive last couple of days for sure. So equity markets are affected. This has been. I mean, we warned that this may happen. This is not my level, my area of expertise for sure. The equity markets, and we'll just have to push through it. I think again, the world I'm living in, more in the infrastructure, in the private infrastructure market and world, we're long term, and we of course we see that it causes some disruptions in the supply chain as things are being moved across the border in the US. But we've actually done some stress tests on that. We were involved, for example, with the Copenhagen Infrastructure Fund 5. They have quite a few onshore projects, battery projects in the US. We've seen that they have very little, even in a kind of not so optimistic scenario, impact on the cost of their projects.
It's intriguing because I've already felt, speaking to some of my contacts, there has been a backlash generally against American companies. And do you think that, if in terms of data centers in particular, a lot of the servers, the big servers are based in the US. Is there a sense that people will be rethinking the way that they lodge data, save data, or use these servers in terms of, the outlook for data centers? If there's a backlash against American companies, that would maybe affect power demand.
In the US, yeah.
Yeah, in the US.
Yeah, let's hope it doesn't come to that. I mean, let's hope you've heard the news as well and talking all about, excluding American companies from tenders in Europe and so on. I mean, that's, let's hope we don't get to that place. So, but on the supply chain issue, I think a more interesting thing is to talk also about the Chinese supply chain, right? And how we can get around maybe a black and white thinking around that. I mean, it feels so comfortable for many from a security standpoint, right? We saw the 5G grid a couple of years ago, and now, of course, the wind turbines, the batteries, they all come with quite advanced electronic control systems, right? And I've seen people proposing solutions that I think are sensible. That's that the hardware can be imported from China, where the pure stripped down wind turbines or solar panels, or even just the battery cells, and then the whole electronics, the balance of plant, the steering system around it can be produced and assembled in, for example, Europe or in the US. I mean, alleviating any kind of the fears of embedded malware and so on. I think that to kind of find the compromise there is probably very good for the cost inflation or in our supply chain.
And also for accelerating the energy transition in places such as Europe. And maybe this is where Europe gets to benefit from the obvious trade war between the US and China.
Indeed.
Yeah.
Indeed.
Are you concerned about a rise of protectionism generally? I mean, we've seen certain moves across Europe, a lot of backlash against interconnectors between countries. Certainly people looking for simple solutions to complex issues. I know you're more looking at long-term infrastructure investments, Harald, but a rise in protectionism could maybe jeopardize some of that thinking.
Yeah. No, I think the power system is such a clear example of the benefit of international cooperation and international interconnection. It's probably at least one of the clearest examples I know of, right? I mean, the whole security of supply situation for an interconnected continent versus countries that are not, or the whole weather situation with the wind and the sun and being able to optimize across different weather systems and all these kind of things that are so fantastic in our industry that they should be rolled back. That would be a bad day for sure. I don't see it yet, but yeah.
We hope that there isn't a danger for pendulum swinging against the energy transition, would you say, Harald?
Well, it has swung against it in the sense that I think the enthusiasm or the belief that this transition will happen within 2050, that we will reach the 1.5 degree target, I think that the hope is more or less gone. On the other hand, renewables are more and more, just seen as another power source, and they're competing. When they're cheaper and better, they'll be used, and if they're not, something else is being used. It's a kind of a rational thinking creeping into it. So, but yeah, I mean, we've heard some cynics. I mean, they said that we're not in an energy transition; we're more in an energy addition, right? where the renewables are just kind of accounting for the growth and not really replacing fossil. And unfortunately, they have more or less been right so far, right? So, but again, the pendulum is still firmly in the renewables court in terms of what we see from new investments going forward. Is.
I mean, that's very assuring, especially if you're a proponent of the energy transition. But how you mentioned data centers and focusing more on the US, Harald. But what about in Europe or in other parts of the world? What's the outlook here? I mean, in some parts of Europe, you're seeing already a saturation of data centers and people being, prohibited from building new ones until there's there's strengthening of the grid. But elsewhere in Europe, I mean, I'm thinking particularly Ireland, but in other parts of Europe, is there a growth in data centers?
I mean, we've seen, Microsoft rumors that they're maybe pulling back some of their plans in Europe. Whether that's rumors or true, I don't know. But clearly, I mean, you should put those data centers where there are plentiful of renewables, whether it's sun in Spain or wind in Ireland or in Finland or somewhere where you have the right conditions for it. And I think they will come for sure. But it's always a question: are there other things that you should rather use it for, right? So Norway being a case in point there.
Mm. And are you? And what's your view on the outlook for green hydrogen as well? Because obviously that requires a massive infrastructure boost, not just maybe in Europe, but also if you're going to produce it in other parts of the world, Harald.
Yeah, no, I mean, of course, the optimists have been pretty disappointed by the lack of growth there. But then again, it's to say that it's not going to happen is also wrong. We're seeing some serious players doing some serious moves. Total, has a big project in Germany that they're building, for example. I mean, there's maybe that we've underestimated the long-term effect of this. And it's in Europe, which imports 70 or 80% of its energy, and most of that being fossil fueled. It kind of feels strange to put them to spend that energy on making some kind of power to X. So it would have to be in very special places with special conditions. I think the rational thing for producing green hydrogen and its derivatives is, I think, outside of Europe. But
interesting, very interesting. Yeah. No. Harald, I mean, the Norges Bank Investment Management has also invested in wind farms in Germany and Denmark. Are you concerned? There are some concerns about wind power. I'm not sure if you share them, in particular about the cannibalization effect, so-called, when there's an oversaturation, overproduction, that then sort of has knock-on effects, and it means that investors sometimes hold back because the returns aren't there anymore. Is this a real issue in certain parts of Europe in particular?
Absolutely. No, it's a huge concern, and something that we spent a lot of time on. So yeah, we're banking on that the interconnectors between the different countries are not going away, or that they're even getting strengthened. We're banking on a strong growth in the battery sector for sure, that we're seeing also. We're seeing batteries come down dramatically in cost, right, to something like $100 per kilowatt, and we're seeing that the battery parks now are being built, going from 2 hours to 4 hours to 6 hours and even to 8 hours. And I think kind of when it becomes really profitable to have 8-hour battery systems, that's maybe a tipping point. That when the whole industrial shift can be covered by a battery park like that. So it's going to be an interesting race, right, between negative hours and the build out of battery parks and the build out of even more solar and wind, it's going to be volatile, and it's going to be interesting.
That's it, and the main thing is keeping the grids, of course, resilient at the same time, so that the lights don't go out. And I suppose the interconnection issues is crucial here. That so all parts of Europe actually benefit from the wind and the solar and the batteries. I think that's probably quite crucial going forward. But to round off here, Harald, I mean, is what's happening currently, I know it's very short term, it's day to day, it changes by the hour in the current markets, and I know it's very equity focused, but it's also hitting oil and gas, and in effect also sentiment and psychology in the renewables market. But is it going to change in any way the way that you guys invest or look at these markets?
Yeah, I think, we have to follow especially look at the demand forecasts very, very closely, the growth forecasts, and that we have at the moment. We have to make sure that the counterparties that we're dealing with are strong, continue to be strong. That's really important to us. So, but no, as you say, I mean, every day brings up new surprises. Every week looks different from the last at the moment. So we focus on our fundamentals. That's what we have to do.
Fundamentals and more the medium and the long term, and not the short term.
Yes.
Yeah. But how do you see this panning out this year? I mean, obviously, you don't have a crystal ball, Harald, but but there is a sense we're on the sort of precipice here, and we could kind of, things could come to a bit of a standstill. I mean, what are your kind of red flags in this situation?
No, I think we're in uncharted territory here, Snowfjord. I mean, we haven't really been here before. I think power demand really coming down over a long period of time. That's surely something we don't want to see, right? That's. I mean, power is the fundamental, call it, infrastructure of society. And I mean, if these things, if society shows that they're not interested in that anymore, I mean, that's when we really have a problem, I'm sure. So that would be the one I'm looking at. But I'm sure others with other focuses have different indicators.
Because the key, as you say, the key to the energy transition is the electrification of several different sectors. And if that power demand looks weak going forward, then that's the concern, absolutely, as you rightly point out. And I think, do you think you would be seeing the lasting effects maybe of this tariff war for a while? I mean, repercussions in other markets, because of the sentiment is kind of very, very uncertain at the moment, and you'll see maybe not your fund necessarily, but others holding back.
Yeah, I'm sure. I mean, there are very few investors who are not exposed to the equity markets one way or another, right? So those who are will surely also have less firepower for the infrastructure of the private markets. And but on the other hand, I mean, it could also be that we see a rational thinking around it, that the private infrastructure markets, especially, I mean, there's been a lot of talk about around grids, right? I mean, there could be no safer haven than that, right? In a turbulent world. And also the same goes for a solar park or a wind park with the 10, 15, 20-year PPA with a solid counterparty. I mean, that to me, that sounds like a safe haven, and as far as you can get it. But
I think it's very important to end on a note of optimism there, Harald, and looking at the safe havens rather than the turmoil that's occurring all around us at the moment. But Harald van Heyden, thank you very much for joining Plugged In, and we hope to have you back on again soon.
Thanks for having me, Richard. It was a pleasure.